State tax policies are evolving rapidly across the United States, influenced by economic pressures, political ideologies, and shifting public priorities. As we navigate through 2025, several states are implementing significant tax reforms that could impact businesses, residents, and overall economic landscapes. Understanding these changes is crucial for taxpayers and policymakers alike. In this video, we will explore the top 10 state tax policies that are changing, highlighting key reforms and their potential implications. 1. North Carolina's aggressive income tax cuts. Overview. North Carolina Senate Republicans have advanced a 2-year budget plan that emphasizes significant income tax reductions. The plan proposes lowering the individual income tax rate to 3.99% in 2025, with a long-term goal of reducing it to 2.99% by 2028. This move contrasts with Democratic Governor Josh Stein's proposal to freeze current rates due to concerns over future revenue drops. Implications. These tax cuts aim to enhance economic competitiveness but may lead to reduced state revenues, potentially affecting funding for public services like education and healthcare. 2. Washington's proposed wealth tax. Overview. Washington Governor Jay Inslee has proposed a wealth tax targeting individuals with personal wealth exceeding $100 million. This tax is intended to address a projected $16 billion budget shortfall and aims to generate approximately $10.3 billion over 4 years. Implications. The proposal has sparked debate, with proponents arguing it addresses economic inequality, while opponents express concerns about its potential impact on the state's business climate and high-net-worth individuals. 3. New York's income tax reduction proposal. Overview. New York Governor Kathy Hochul has proposed a $1 billion income tax cut over the next 2 years. This initiative aims to reduce tax rates across 5 brackets, benefiting approximately 8.3 million taxpayers. Implications. The proposed cuts are part of a broader affordability agenda, which includes measures to address housing costs and public safety. However, the plan requires legislative approval and may face challenges due to potential impacts on state revenues. 4. Utah's elimination of Social Security tax. Overview. Utah Governor Spencer Cox has proposed eliminating the state's Social Security tax in his budget plan. This reform could provide relief to around 150,000 residents, saving approximately $950 annually per individual. Implications. While the proposal aims to ease financial burdens on retirees, it would result in a $143.8 million annual revenue loss for the state, raising questions about the sustainability of such a tax cut. 5. Iowa's transition to flat income tax rate. Overview. Iowa has enacted legislation to move from a 5.7% top income tax rate in 2024 to a flat rate of 3.8% starting in 2025. This change is expected to save taxpayers over $1 billion over the next 6 years. Implications. The reform aims to simplify the tax system and enhance economic competitiveness. Additionally, a proposed constitutional amendment would require a 2/3 majority in the legislature to raise income taxes in the future, providing long-term tax stability. 6. North Carolina's budget plan emphasis on tax cuts. Overview. North Carolina's Senate Republicans have advanced a budget plan that allocates $32.6 billion for fiscal year 2025 and $33.3 billion for 2026. The plan focuses on continued income tax cuts, aiming to lower the individual rate to 3.99% in 2025 and eventually to 2.99% by 2028. Implications. The emphasis on tax cuts over public services has drawn criticism from Democrats, who argue that essential services like education and public safety may be underfunded as a result. 7. Oregon's increase in gas tax. Overview. Oregon has increased its gas tax to 40 cents per gallon as of January 1, 2024, up from 38 cents in the previous year. This adjustment keeps Oregon among the states with the highest gas taxes in the U.S. Implications. The tax hike is intended to fund infrastructure projects but may lead to higher fuel costs for consumers and businesses, potentially affecting transportation expenses. 8. Georgia's transition to flat income tax rate. Overview. Georgia has enacted legislation to move to a flat individual income tax rate of 5.49% as of January 1, 2024. The law also establishes tax triggers that could gradually reduce the rate to 4.99% over time. Implications: the transition aims to simplify the tax code and provide tax relief to residents, though the gradual reduction may depend on future economic conditions and state revenues. 9. Mississippi's reduction in income tax brackets. Overview. Mississippi has eliminated its 4% individual income tax bracket as of January 1, 2023, transitioning to a flat rate of 5%. The rate is scheduled to decrease to 4.7% in 2024 and gradually drop to 4% in 2026. Implications: the phased reduction is designed to stimulate economic growth and attract businesses to the state, though it may result in reduced state revenues during the transition period. 10. Maryland's digital advertising tax. Overview. Maryland has implemented a digital advertising tax, which is currently in effect. The tax applies to revenue generated from digital advertising services and is part of the state's efforts to diversify its tax base. Implications: the tax has faced legal challenges, and its future may depend on the outcome of ongoing litigation. If upheld, it could set a precedent for other states considering similar taxes on digital advertising. State tax policies are undergoing significant changes across the United States, reflecting diverse approaches to economic challenges and fiscal priorities. From income tax cuts and wealth taxes to adjustments in fuel taxes and digital advertising levies, these reforms have wide-ranging implications for residents, businesses, and state economies. Staying informed about these changes is essential for taxpayers and policymakers to navigate the evolving tax landscape effectively. As states continue to adapt their tax policies, monitoring these developments will be crucial in understanding their impact on both local and national levels.